Hey, it's Bill Gross, the LA Probate Experts. And when are mortgage rates rising, not really rising? Well, we're going to break that down, but when it says it's rising in the news, it might not be rising. Let's take a look at it. So one of the things, if you follow my weekly video, is to talk about the inconsistency and inaccuracy of the real estate news industry. It's worse than politics or the general news. You know, every day we get bombarded, I think, with news about wars or health scares or economic changes. And the headlines scream, but many times you break down the story in detail, it's not as bad as it would look. That's clearly the case with mortgage. And I believe it's designed that way to fool us. Let's take a look at it. So the first thing I want to show you is the Wall Street Journal. Now, normally you would think of this as being a very legitimate, very excellent newspaper giving you accurate information. Is it? Well, here's the headlines today. Mortgage rates continue to escalate. Notice continue to escalate, move closer to 6%. Now, this was written a day ago, yesterday. And of course, they have a picture of a for sale sign. When you read the story, you find out that rates are continuing to go up. It's not true, and I'll show you why. It's factually not true that they continue to escalate, but I'll show you where. CNN goes even a step further. They report not only do mortgage rates rise again, but they price more buyers out of the housing market, as if buyers are watching the news and go, oh, wow, rates went up again. I'm not going to buy a house. And it doesn't quite work that way. They don't actually interview buyers. They have pictures of government officials with a panicked look on their face, looks very serious. But the real story is that rates actually went down a little bit. And I'm going to go into that. Here's the long history, which is accurate. Here's the shorter term history, and we're going to break that down. And of course, they're going to have an opportunity for you here to use their advertisers to get your mortgage. But let's get into the details of what's really happening with mortgage rates. In reality, there's three different things that they're being tracked here. The press is reporting the Fannie Mae rate, which is reported weekly, or the Freddie Mac rate, which is also reported weekly. This is the cumulative sale of these quasi-government organizations of their mortgages. And then you have the actual rate on the market today. So think of it like this. The mortgage rate is like a stock price. When the markets are open during normal business hours, starting here at 6:30 in the morning, along with the stock market, and closing similar time to the stock market, and the days similar to the stock market, on days that the market's open, there's a price for mortgages. And you can buy or sell those commodities. Now, just like trying to buy gold or wheat on the market, you have to buy a large amount, be approved to buy, and so people use brokers to make the actual transaction. But what you'll notice here is there's actually three different lines. The highest one was the consumer, the actual market rate, and then these, which is done daily up to the spot. That's why the Fannie Mae and Freddie Mac stops here last week and here as well the week before, also last week. And then the rest of the week, the mortgage rates actually continued to decline. So today, for example, the 30-year fixed rate is at 5.85. Last week, it was 6.03%. So the actual interest rates have come down about not quite 0.25%, but over 0.125%. To an average buyer, that's the same as a 0.5 point. If you're borrowing, let's say $800,000, that means your points went down by about $4,000. So if anything, you can see the mortgage rates have gone down below where they were in the prior weeks. Why is it that the press reports these rates? Well, back in the day, when news was controlled by the brokers and controlled by certain press institutions, the brokers would give out information and report it once a week so they could buy or sell in between to their advantage at the opposite of their customers. Similar to the stock market. Now with the markets being reported instantaneously, that difference in stocks has changed. That's why people have zero commission rate opportunities, but not in mortgages, interestingly enough. And so this is one of the inefficiencies in our real estate market that still exists, that the market makers who buy and sell the mortgage securities that make these things up kind of have this game going with the national press and with Fannie Mae and Freddie Mac to make it sound like rates change once a week. Well, in reality, During the market moments, they change nonstop. And what's the effect? The effect of all of this is that consumers are getting bad information. And again, being told that rates are going up, sometimes they're going down, and down sometimes they're going up. What's the real truth? The real truth is the rate matters when you can lock it in. Now rates, it looked like the stock market was going to drop to zero, and it seems to have hit a bottom recently, has moved up off of those bottoms. Similarly, mortgage rates, which had been straight up, seems to have hit a top and has started to come back down a bit. Also with oil prices. So does that mean we've now hit the bottom and we're changing in the stock market? Does that mean we hit the top of the mortgage rates? I don't know the future, but as of today, it's not as bad as it was. And certainly, it's not some runaway thing that we're going to lose control of. And that's why when people say rates are increasing, that's a clue they're inaccurate. Because rates aren't increasing or decreasing. They are where they are at any moment in time. And then they reprice the next minute that the market is open. And so when you see a headline saying rates are rising, that predicts the future, by definition untrue, or declining is also predicting the market untrue. If you want to say rates rose or rates declined, either one of those might be factually accurate. But to say they're increasing is by definition, I think, misleading. So what do? Work with professionals. I work with great mortgage lenders. When people buy a house, the tendency is to shop before they even have the house. Big mistake. We find a great lender to help you get the house that will promise you a competitive rate. Then when you're under contract, you shop and verify that you got a great rate. That's when the rates matter, the day that you can lock in your interest rate. So if you need help buying, you need help selling, you want to make sure that you get the best outcome in your transaction, call me, text me, or email me. I'm here to help you. My social media is Bill Gross EXP, or call me or text me. The number's below. And as always, make this week your best week ever. Thanks.